The market is at its lowest point of the entire year, and we have a lot of volatility coming our way. So, like I just said, the stock market has been bleeding off in a major way lately. In this video, we're going to talk about the most important things to know heading into this week. So, Tom, we're not wasting any time. Let's get right into it.
Yeah, Mike, like you said, the market was down quite a bit. And actually on Friday, it was a pretty bad day in the market. Nike kind of started the downtrend, I could say, in the morning as they reported some pretty bad earnings. Now, their earnings were actually okay, but they did say that inventory issues were hampering their bottom line, which we will get into in a second. But what really caught my eye, Mike, were some of these statistics about the S&P 500 and NASDAQ. So they actually both wrapped up their first three-quarter losing streak since 2009. That's a pretty bad statistic in my eyes, Mike. 3 quarters straight losing streak. This has not happened since '09. Obviously, in 2020, it was pretty rough when the S&P 500 fell down, but we did see that recovery come back very, very quickly, which also helped the NASDAQ come back up. Now, the Dow doesn't exactly have as big of a losing streak. Their last time since having 3 consecutive quarters losing was 2015. So not quite as far back as the S&P and NASDAQ, but that's pretty bad, Mike. All the way back since '09. Obviously, we know that's back whenever all that volatility was going on from 2008 and the housing crisis and everything like that. So pretty bad statistic. And we just kept seeing more stocks fall down, like I showed on that heat map, and the SPY's breaking that big support at $360. We actually close around 357.18, which is a terrible break of support.
Yeah, so the SPY is right around 357. There's a bunch of momentum to the downside. What are like the next major levels to watch out for? Because we are below a lot of key levels right now.
Yeah, it's pretty hard to see. You can see on a 1 hour chart, we have to go all the way back into the summer of last year to even see some nice levels that we could potentially bounce off of. But we're honestly, like you said, right around that support at 360. We're going to have to be careful of a little bit of a fake out here. The SPY could possibly have a good pre-market tomorrow morning and come back up. So be careful of the fake out. But if we continue to see the downtrend, Mike, I see a huge support at $340. That was actually the pre-COVID high, and I'll put it here on the chart, and we'll actually leave it here for the next couple months and maybe see if the SPY can get down to that. But we're at 357.18 right now. Last week, we saw a terrible move from 370 down to there. That was like a 13-point drop. So I could maybe see another drop, Mike, maybe getting close to 340 sometime over the next couple weeks. Now, we don't have any big earnings coming up anytime soon this week, Mike, nothing too big. So I don't really expect these to affect the market too much, but we do have some jobs numbers on Friday that could really maybe cause the S&P 500 to either fall or drop, depending how those end up.
Gotcha. So tell us more about the events this week and what we need to know.
Yeah, so those jobs numbers, like I said, on Friday are going to be pretty big. They're going to be coming out Friday morning. I'll bring them up on the calendar here at 8:30 a.m. Eastern time. We'll get the unemployment rate for September along with the non-farm payrolls. Now, the reason that this is going to be so important is because if these numbers come out better than expected, initially you'd think that's a good thing, but it can be a bad thing for the markets because that honestly means the Feds can keep raising rates at an aggressive pace. Lael Brainerd talked about on Friday, they are committed to avoiding pulling back prematurely on their restrictive monetary policy. For anybody who doesn't know, she's the Fed vice chair, one step under Powell. So pretty big words coming by her. And it sounds like they're not going to stop raising rates or holding rates at least 75 basis points for a little while. So we have to see that inflation start to fall. And if these jobs numbers come in better than expected, it means that the Feds can just keep raising rates or holding them higher for even longer. So we got to see these jobs numbers almost come in pretty bad. And I hate to say that, Mike. It sounds weird to say that, but we almost need a bad jobs report. Now, it could hurt the market both ways. So it's going to be a very strange thing here at the end of the week.
Yeah, it is interesting because it's like the Fed, their main goal is to get inflation to like really slow down, right? We need that. And at the same time, they're kind of saying like, as inflation slows down, there's a decent chance we're going to see that data reflected in a bad way through the jobs reports. And it's like the market is in a weird stance where it's like we don't want great unemployment data. We don't want horrible unemployment data, but ideally you want somewhere like that's just kind of like with expectations. So then the market doesn't have an excuse to fall down in either way. So it's kind of weird, but that's the market we're in right now.
Yeah, and that will be coming out Friday. So we will have about 4 days of movement. And then we will talk about this more in future videos coming up at the end of the week. But getting back into Friday's movement, Mike, that was a terrible break of support, like we talked about at SPY around 360. And a lot of that really came from Nike's bad movement early on. Like, look at that drop with those earnings. And they kind of forecasted what we've been seeing across the board for other companies like Target, Walmart, and even other companies like that, where they're talking a lot about having too much inventory at the moment. I know that over the past couple of years, there was a lot of issues where companies didn't have enough inventory, obviously, whenever COVID first happened and just after. And now they're actually seeing where they have to kind of get rid of some of the over or excess inventory that they've been building up. So they said that they decided to take that inventory and more aggressively liquidate it so that they can obviously put the new inventory out there. But Mike, their earnings were actually good. The EPS came in right as expected. The revenue came in just over expectations. But the main thing was just over having too much inventory at the moment. And it says their net income was down 22%, which also didn't sound too good.
Yep. Alrighty. I want to talk about the SPY a little bit more really quickly. While it has been brutal lately, one, I always want to say this when the market's low, it's always good to slowly buy into stocks at these levels. No one knows the bottom, but if you just buy in, regardless of any scary headline or anything like that, it has been a very, very smart decision, historically speaking. So really consider slowly buying the dip. But in terms of short-term trading, Tom, looking at the SPY, we're at 357. I feel like, yes, the market is overextended at this point, somewhat similar to how it was overextended in the middle of August. We can see the stock market just rocketed up. It just popped way too quickly. A lot of market moving companies were up 20 to 30% or even more in just like a month or so. Now we're seeing these companies like basically at the low of the year. So while we are overextended to the downside, I feel like the move was too much too quickly. So I would not be surprised at all if we saw a bounce up pretty soon.
Yeah, I mean, I wouldn't either, but at the same time, we're seeing a pretty big break of support here, and a lot of companies are just starting to report a lot of negative numbers. There's a lot of negative sentiment going on in the market. I kind of feel like we might see continued movement to the downside in the short term personally. Now, I know that obviously everybody has different sentiments on the market, but I kind of feel like that's a pretty big break of support there, and we might just continue to see a little bit of movement down here now that we have that momentum. But like I always say, Mike, we have to be careful of these fake outs and stuff like that. And I feel like obviously I've seen a lot lately where the market seems to go against the majority, and a lot of people have been kind of swinging to the downside lately. So that does worry me in that sense a little bit. And like you said, just so many companies are down around support. Like look at Disney. They're almost like right down to that low of the year. Apple's right around support. They're approaching their low of the year too. I will say last week though, Apple was having quite the sell-off. Like you said, though, almost too quickly. So we have to be careful. It's going to be extremely volatile. It's really hard for me to pick a direction right here, Mike, because, like you said, it's so overextended, but that momentum just keeps going down.
Yeah, the $1 million question is, will it be a fake out? And we'll know within probably a week or so, maybe 2 weeks. So we'll see. But Tom, what else do we have going on?
Yeah, so that's the big stuff for the week, Mike. Obviously, the Dow was down a lot. The heat map has a pretty bad look to it. That was very bad on Friday, all that negative movement. We need to see this start to pick back up and come back in during the week. Now, as we start to look at the calendar for this week, Mike, towards the middle of the week on Wednesday, we are going to have some pretty big news with OPEC and the oil stocks. So they will be meeting on Wednesday at OPEC's headquarters in Vienna to finalize output quotas for November. And this is going to be a very big deal for crude oil. So everybody, you can watch crude oil futures on TradingView at CL1 ! For the most recent contract. For anybody who doesn't know futures, just do CL1 ! It'll give you the right price for crude oil. But nonetheless, Mike, we need to see crude oil start to go back up for some of these oil stocks because ZOM, Oxy, and stocks like that, they've been really dipping down recently. And, looking at the daily charts, they still seem a little bit overextended. If OPEC decides they have an output increase or something, we might see these stocks start to dip. Or if they do the opposite, they could start to pop up. So really watch that event Wednesday. I know a lot of people have been into the oil stocks lately ever since they've been volatile. Obviously, that was really crazy to see them going up so much during all that during the Russian invasion at the beginning of the year.
True that. Oil stocks have not been doing that well lately. You know, they've been doing a lot better than other stocks, but still, even they're selling off. So, Tom, it is now time for the momentum plays. With the first one, we have SE to the upside.
C Limited. Yeah, they actually had a really good move Friday. Go ahead and make them try to break out above 56.80.
And with the next one, we have ABBV to the downside.
AbbVie. Wow, Mike, this thing's selling off way more than I would have expected, but make them break down below 134 even.
All right, and then with the last one, we have Disney to the downside.
Yeah, poor Disney here. I like buying them for the long term, but for this week, go ahead and make them break down below 94.20.
All right, so we're watching Disney and AbbVie for potential day trades to the downside tomorrow, only if they break below the levels Tom listed. And then we are watching SE for potential day trade to the upside tomorrow, only if it breaks above the level Tom listed. And then we have to give a giant shout out to today's member of the day, Ethio Trader. We actually had an awesome post in the Discord chat where he made a bank on Wednesday, and he made around $4,000 with Meta call options. So there we go. Awesome job.
Yeah, he said he saw him in the video. So great job, Ethio. That's a big play, Mike. $4,000 right there, up 61% on those options. You can see he bought them at 256, and at that current price, they were at 413. So amazing play there in the middle of the week on Meta. Hey, I'm glad he made money on it in the middle of the week, Mike, because as we know, Meta started to fall back off towards the end. So great play there to kind of play that double bottom. It was a nice little scalp.
All right, there we go. Well, I'm very excited for this week, Tom. You know, I feel like either way, we're going to see some volatility, which is a great thing. We've been seeing a ton of chop lately, which has been pretty hard to trade. So I think this week's going to be a lot better, just more so in terms of momentum. And in my opinion, I hope it's to the upside.
Yeah, like you said, lots of chop. Look at the SPY here. It's almost like that scene on The Wolf of Wall Street with the chop. I mean, look at how the SPY opened up last week on the 26th. We just continued to see that up and down movement all week long until Friday. We finally started to break down a little bit lower, but like you said, very tough to trade this type of market. Hopefully we start to pick a solid direction sometime soon. And I think that these jobs numbers this week might just do it for us. But yeah, some big stocks this week, Mike. We're going to see how Apple and Microsoft affects the SPY. Those have been some pretty big players lately, along with Tesla. They've even been starting to sell off in a pretty big way.
Alrighty, well, thank you guys so much for watching today's video. Don't forget to subscribe if you liked it. We post brand new videos every single day. Besides that, let's have a great week.